Hello, Oracles. Well, the market was red today, but Tesla was green, so we're putting on this green shirt today. And what a great day it was for Tesla. Obviously, the market did not do as well. We had Jerome Powell coming out around midday to reiterate what was said on Friday about the fact that the Fed is not opposed to raising the rates by 50 basis points at any one of their meetings if the data shows that it is required to try and keep inflation in line. So the markets, they digested this, they freaked out a little bit. All in all, it really wasn't too bad. My portfolio was green on the day. Let me know in the comments below how your portfolio fared. And I'm sure most of you are going to be in the green because most of you have Tesla as a majority of your portfolio. But let me know how you guys did today based upon how the market fluctuated. Tesla does have a nice resistance at 941, which it bounced off of almost perfectly and then came back down. But the rest of the market, a little bit of a sell-off. And honestly, it wasn't terrible. It wasn't a really strong pullback. And especially after the 3 really strong days we had last week in the market, seeing a sell-off today was actually not terrible. It could have been way worse. I think the market is just kind of feeling out and pricing in a little bit more of what a second rate hike could potentially do, or having 2 rate hikes at the same time. So honestly, the market is now figuring this out. They're anticipating it, and we can go forward. So now I think if we do, for some freak reason, happen to get a 50 basis point hike in May, the markets may not react to it much. Now, granted, there's a long time between now and then. We've got, a month and a half before then, so a lot can happen. But based off of today's information, could be relatively smooth sailing. And now one of my thoughts and comments I wanted to make about inflation as it relates to earnings going forward is something I see in my own business. I've been in retail for 15 years now, and I see obviously, when inflation goes up, our prices go up, our sales go up, and therefore our year-over-year growth for the company goes up and our earnings look good. However, the reverse is going to happen when inflation starts to come down. So with inflation still going up, we can still anticipate earnings, for the most part, looking pretty good because the numbers are going to be inflated. But when inflation starts to come down, we're going to start to see earnings reports that don't look as good because they're not going to show the same growth. This is where you're really going to be able to separate the great companies from the good companies from the bad companies. The great companies are the ones who are going to still continue to show continued growth despite the fact that inflation is coming down. Good companies will probably be about level. They might not show the same growth, so the market may, reflect that. The bad companies are going to be the ones that, could be the high growth companies that, have a lot of debt, are not profitable, haven't set themselves up to be profitable, and so because inflation is coming down, their pricing power is going to come down, and the market is going to frown upon them because they do not have the same growth that they had been showing previously when inflation was high. And so how do we determine now, before we get to earnings, and before we get to earnings when inflation is coming down, which companies are going to do well, which ones are going to be great, which ones are going to be good, and which ones are going to be bad? One of the main pieces that you can look at is something we have talked about before, which is pricing power. Companies with very strong pricing power are going to be the ones that are going to be the great companies coming out of this. They're the ones who have big fat margins in their company, whereas if the inflation comes down and the prices have to come down due to inflation and they need to keep their demand high, they can bring the prices down a little bit and they're still going to do well with margins. Tesla obviously is one of the top players. So if you look at pricing power and demand as the 2 key components to being a great company in a deflationary type scenario, those are the key pieces that you want to look at. Because when inflation is going to come down, Tesla still has the demand. They're still going to have the customers rolling in. So they can lower their prices down, and they're also going to be able to lower their costs down. So they're going to still have that turnover. They're going to still have the margins that are coming in. They're going to still have the revenues growing. That is key right there. You're going to see the similar things in an Apple type of company as well. They're still going to have their sales, they're still going to have their margins, they're still going to have the revenues coming in, despite the fact that prices are going to be coming down across the board, because they don't have to come down with their prices. People are still going to buy them at the high demand prices that they are currently at. Tesla is going to be doing that probably through 2024. So while we know that Tesla wants to bring their prices down, they don't need to. Their costs are going up and the demand is still going up from where it's at right now. So they have the luxury of keeping prices steady with their pricing power. So if there's any one piece of information you're going to look at to determine what companies you want to be invested in when inflation does start to come down, it's the companies who have pricing power and high demand. Customers who have pricing power due to demand being so high are the ones that are going to do the best coming out of this scenario, because when we get to that point, they're still going to have all of the customer flow coming in, all of the revenue coming in, all of the margins and profit coming in, while the other companies are going to be suffering and they're going to have to lower their prices, which in turn is going to lower margins, because those companies with great demand and great pricing power are going to continue to see their earnings grow, whereas the other companies are going to see their earnings fall down. And they're going to fall down, and it's going to be potentially a market-wide feeling, because there's going to be a lot of companies in this situation. And not to say that all the companies that are like that are going to go under, it's just that they may have a couple of quarters that are going to be losing quarters that they're going to have to come back with. Similar to what we saw coming through COVID with, a bunch of the recovery plays, the plays like the airlines, the cruise lines, things like that, the travel plays. Those suffered because the demand was not there. They did not have the pricing power, so they had to bring their prices down in order to bring demand up. So this is what we're going to see coming out of the inflationary period that we're in, with a bunch of other growth companies as well. Let me know in the comments below, what companies do you think are going to be some of the great, good, or bad companies when inflation does start to come down? And let me know why you think that. Give me some statistics and details on the companies that you're looking at. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.